that time again. It is the weekend. This is the Currency Room. My name is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and let's get into the market. In this session, as always, we go through the previous week. We look backwards and say, okay, what happened this week? Let's take a look at the broad markets. What did each currency do? And then, of course, we're always going to rescore everything. Every week we do this. We say, okay, here's what just changed. These are the stronger currencies. These are now the weaker currencies. We'll take a look at everything, plus the news coming up this week. And as always, we're going to be pairing up the strongest against the weakest currency pairs and look for trading setups.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So let's start off with last week's events. We did get a pullback in equities. The equities have been super strong. They've been very little pulling back over the last 2 months. We finally got about a 1.5–2% pullback. We're going to take a look at the charts, and we're going to see that we've pulled back to some pretty key areas, and the bounce off these key areas wasn't all that great. We heard from the Bank of England. They raised rates as expected by 0.25%, and the cryptos, they're not doing anything. They've remained bearish. Look, they came down. They didn't bounce whatsoever. We don't like the cryptos at all here, and they are starting to sink a little bit lower here after going sideways for a week or two. Let's look at the calendar. What happened last week? The week started off with Chinese manufacturing, came in slightly better than expected, gave a little pop to the markets, but it was sold off pretty quickly. We also heard from the RBA. The RBA surprised the market and did not raise rates. They didn't. Surprisingly, the Aussie actually went up a tiny bit on that news, but the Aussie was one of the weaker currencies this week. We also had the ISM manufacturing out of the US and the JOLTS right at the same time, and it showed that the economy was a little bit weaker than expectations. Tuesday was just a stellar day. Look at Tuesday night. Kiwi employment report. Stronger on the employment change, a little bit weaker on the employment report. So a mixed bag on that one. And then I'm going to jump all the way down to Friday because we got both the U.S. payrolls report and the Canadian employment report, and they were both weaker than expected. Now, the U.S. report was slightly weaker on the headline number, 187,000, but the unemployment rate and the average hourly earnings were stronger than expected. But I want to point out the Canadian number was actually pretty bad. They were expecting a positive number, and it came out a negative number. So let's get into the numbers. Those are the stories of last week, but let's get into the numbers. As I talked about, we had about a 2% pullback in equities. We'll take a look at the chart next. We'll talk about these key levels it's at. As you can see, crypto down 6.5%. Oil, we talked about it last week. I said I'm really bullish here on energy stocks. Oil continues to move higher. Let's jump into the S&P because I wanted to spend a lot of time on this chart because this chart is a little messy. Now what we had this nice run to new highs and we were high basing and we just could not break out of the base. And then what we got on Tuesday afternoon, after the bell closed in the stock market, we got Fitch downgraded U.S. debt. That was a big downgrade because it hadn't happened since 2011 when it happened the very first time. This put the market back on its heels, and you can see that we actually dropped. We came down below the 20-day moving average. I mean, look, we have held the 20-day moving average for a long time, and we pierced below it. Now, a lot of times you get a pierce and a recovery. And I was actually meeting with our stock and options group, and I said, look, I know Thursday's candle, we were down below 20-day moving average for the first time in a long time, but it was still a green candle. It gapped down, but there were more buyers and sellers. And I said, if there is a green candle on Friday, then I think that's a buy opportunity. That's a really nice bull pullback because a lot of times you get these markets that pierce moving averages, stay down there very, very short amount of time, like 1 or 2 days, and then they rally back. That happens a lot of times in a bull market. Ankit and I were talking on Friday, and Ankit asked my opinion on the markets. And I said, look, if you would have talked to me 30 minutes ago, which was where the market was, this was a big, fat green candle. And then 30 minutes later, it was a big, fat, ugly red candle. And folks, the markets aren't even closed yet. We're doing this session before the markets close. It could be worse than this by the time we're done. This candle is a nasty candle. And it's telling you that this little bounce point is not likely to hold. So the next level on the S&P is 44.55. That is the next level, and we likely come down and touch that. The level after that is the 50-period moving average. So if we don't hold 44.55, we're going to break down below that. And when we break down below the 50-day moving average, at Maverick, we say the bull run is over. Our line in the sand is the market above a 50-day moving average? If it is, we lean more bullish. If it's below, we lean more bearish. Those are the rules. So as you can see here, the markets are not looking great. If we did this on Friday morning when we had a big fat green candle, I would have said, hey, this looks really good here. And frankly, this was probably a nice buy opportunity. We're right on the edge here, right on the edge of what could happen with these markets. But if we have a close on the low, it's highly likely we see some follow through early next week in equities. Ankit, what's your call on equities?
I'm in the same boat as you. Again, this is where we really need to decide, are we about to change the course of the direction? In the shorter term, it does look like we are due for some profit taking. We had a stellar, so far this year has been a stellar year with some really good returns. So in this environment, I'm expecting a little bit more pullback. I know next week we have the inflation numbers, which might be something that move the markets, but I think overall markets are just due for a bit of a correction. So we haven't really seen this exciting Friday. Markets usually been one way. But yeah, there's still a bit of a distance between the 20-day moving average and 50-day moving average. And that's really where we're going to decide, is this a pullback or is this where we need to make a change in our direction? So next week will be an interesting week. I'm definitely looking forward to it. But for now, this is where I would say I'm looking to sort of change or bring back the bullishness. We're sitting at +3 for the last month or two. I think this is a time to maybe bring that back and sort of reevaluate and see if this is going to turn around or is this where we need to make a change in the direction.
Yeah, we're definitely at a point where this market direction, again, this longer term trend we've been having, it can absolutely change here in the next week or two. Typically, we don't get that change until September. That's just how seasonality patterns work. But the market doesn't really care a lot of the times. It does what it does. As far as the currency market goes, this was a good week for currencies. It was a really good week in currencies. I know that I had a Euro-Aussie trade that I put on Tuesday in our daily recap that worked out really nicely. And I know a lot of traders had a really good week here. But these numbers, they don't really show how good of a week it was. Typically, we have something up more than $1 or 1% and down more than 1%. But if you took the intra-week movement, it was much greater than 1%. Euro and Swiss franc continue to be amazing. We've been long them. We've been saying they're the ones to go long on, and they keep producing and performing. The dollar actually decided to go somewhere. It was pretty flat over the last month or so. It's decided to start to strengthen again as bond yields start to go up. Aussie, Kiwi, CAD cannot get going. So just think about this. These currencies usually go up when there's a bull market. Over the last 2 months, they haven't gone anywhere. They've gone down. Now we're starting to get a possible change in the market. These things are really susceptible to some selling. We'll take a look at all these on the chart. On crypto, look, Bitcoin, Ethereum were flat. They've been flat for a long time. And the other coins, they all fell apart this week. We've been very consistent about crypto over the last couple of weeks. It's not even worth looking at and discussing about trading because we're long only on those. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? So let's kind of update where we are in the market. We have now gone from a +3 to a +2 in the markets. Our rule is, are we above the 20-day moving average, above the 50, and are we having sloping? So at this point, we've backed off our bullish call on equities. If it goes any lower, we'll back it off even more until eventually we will be in the negative if it keeps pulling back. We already looked at the equities here. Let's take a look at the bonds. The bonds made it all the way up, well past the high we had in July. And this is one of the things also that kind of freaked the market out. However, on Friday, we got a big reversal once we spiked up, but we're now just back down to the level of support. Ultimately, I think bond yields do continue to move a little bit higher. It's not going to be a fast move, but I do think we are looking for higher bond yields, which probably supports a little bit higher US dollar. And here's a crypto basket. We've been very clear that in this range here, we were totally disinterested in any crypto trades. And you can see here, we're now breaking down below the bottom of this. So this is very bearish for cryptos. We didn't like them in the first place. We actually want to go short them at this point. It's just not a good place to put your money on the long side. Let's take a look at next week's news. We're slowing down a bit, but we've got a ton of inflation news. China inflation on Tuesday. New Zealand on Tuesday. We have US CPI on Thursday. And we've got more inflation from the US on Friday. This week's all about inflation. There's not a whole lot on the schedule other than that. So be aware when you're trading these currencies which one has news. So again, Tuesday and Thursday are likely to be the best trading days of this week due to these news reports coming out. Tuesday night specifically, and Thursday morning specifically. So this week, we think the market likely comes down some more, putting some pressure. We think that the safe haven currencies are a good place to be. Swiss franc pops to mind right away. It's been strong, and if we do get a sell-off, it's likely to get even more buying because of that risk-off move. Let's jump into the currencies and let's take a look at them one by one. I'm going to go through these cryptos very quick, and then I'm going to turn it over to Ankit because, I don't even want to have you look at them because someone might somewhere say, hey, I think I want to buy that one. Bitcoin, the only positive thing you can say is it's not falling like the rest of them. Okay, well, that's not a super positive thing to say about something. Okay, you're right. Bitcoin is not the worst cryptocurrency right now. That's the best thing you can say. You come over to Bitcoin Cash and say, oh, this one's breaking down below the low of its base. This one's looking ugly. It's not terrible, but ugly. Ethereum is broken down below the bottom of its base. Okay, nothing's ugly. And then we get to Litecoin where it's really ugly. And you say, oh, this one is the worst. So look, just because the others aren't the worst doesn't make them good. Again, we don't like cryptos at all here. We'll come back when the crypto train is going the right way. But for right now, I recommend you just don't even look at a chart on these at all. All right, Ankit, take us through currencies.
Absolutely. I mean, there's definitely a lot of back and forth and a lot of price action here in the currency market. I think that's what we need to focus on. Let's start with the dollar. I think dollar was a bit of a surprising one. I mean, look at that bottom that we made in July, and suddenly we went from a bearish to a bullish. So here we are. We are above the 20, above the 50-day moving average. And I mean, I can't deny that we do look like it wants to break out higher. Dollar is also a good currency to focus on, especially where there's a risk-off sentiment. And here we are on a Friday getting a bit of a risk-off sentiment. I think that could help the dollar go a little bit higher. But the shorter term, it is pulling back, but we need to kind of still look this on the upside, especially on a bull pullback opportunity, as long as it stays above those moving averages. Momentum is slowing down, but so far next week, I think I'll be more interested in looking at on the long side, especially around the U.S. inflation numbers. Now, let's take a look at yen. Now, yen is an interesting one because it's just sitting a bit sideways. So after that big sort of movement last week, I was really interested to see what's going to happen with the yen. This yen is going to fall apart once again, but that did not happen. We are still in the sideways range here. So I'm not as bearish on the yen as I am. So far, this is a bit of a sideways play. But another thing I want to point out is that next week, especially if we continue to see risk-off sentiment, that is really the only moment where yen could catch a bid. So I think I like a yen a little bit more on the upside. If you can break above those moving averages, it's sideways for now. But in those risk-off sentiment, I think I don't want to be short the yen. I would rather be long the yen over short the yen. Now, going into the stronger currencies, I mean, euro and Swiss franc continues to be the best one. And I've talked about how certain currencies have been going back and forth, so I can go long or short. This thing is just one way. I don't like shorting Swiss franc at all here. Every time it does go down, it sort of reverses to the upside. So in this technical term, we are in a high basing once again. So we probably continue going in the back and forth range until we can catch a big run that we got in early July. That's what we're looking for, is that big run. If we do see a big run like that, we want to be getting into those movements. But for now, I'm looking at more of this on a sideways range bound play. I don't like this as a short. I only like this to buy on the dips. On the other hand, this divergence has been playing out between the euro and the Swiss franc. We have been sort of diverging here for the last few months, but here we are. Euro started to look a little bit better on the breakout side. So again, this is a currency that we are now back at the July highs. I think there could be a little potential there for the euro to advance in the shorter term. I do like the upside. The velocity is there. The trend score is there. This is, again, goes on the top of my list for currency to trade next week. On the other hand, pound seems like it has lost its sort of a momentum. This is what it's all about. It's all about momentum. Right now, this thing is not really moving anywhere. So again, you can see that it's not moving up and it's not really moving down. So this is a currency that I would like to just put on the shelf. I think the big move's already played out. We are up against a very strong resistance. And I don't really like to buy it unless we can sort of resume that momentum there. I think euro probably a better call there. Now, going into the growth currencies, this is where, as I said before, a lot of back and forth is taking place. And that back and forth is presenting some great opportunities to look at both sides. So CAD has been more tied to the US dollar. You can see that the dollar gained, and so did the CAD. Taking a look at the oil, usually we see some sort of correlation there, and maybe that is also playing out with Canadian dollar strength. But overall, you can see CAD has been the stronger currency. It's going sideways for now. But, if the dollar stays strong, I don't like to be short the CAD there. I think the long dollar is a better play. But outside of that, I think CAD, as long as the dollar stays strong, I don't really like to be short the CAD there. Now, CAD, it goes in the sideways rating for me. But this is where the direction is, Kiwi and the Aussie. Those two currencies are what's in play. And I want to highlight, we don't see this right now in this chart because we're looking at 2 months performance. But if we go on a longer term time frame, Aussie is breaking key support. And these are the times where we start to get some very good directional move. So as long as the Aussie stays weak, I do like it on the short side, both the Aussie and the Kiwi. This Aussie and Kiwi has stayed weak in the wake of strong markets. And every time we see a bit of a pullback in the equity markets, we see these currencies sort of plummets right away. So this is where, again, telling me that this is the right place to be, especially if we start to see more pullback in the equity markets. If the market sentiment stays weak, this is the place to be. So Aussie, Kiwi, I like it the short side. And again, pairing them up against the euro, Swiss franc, and even the dollar, depending on where the movement is happening, I think that's really the right call to be. That's where the movement is, and we need to kind of pay attention to these trend scores and use the intraday price action or the price action we get during the week. I think those are great opportunities to get short. We have seen Aussie rally a couple of times last week, but both times it was a great short. So I think you need to stick with the overall direction and use the velocity to get that confirmation. Is it ready to be shorted yet? And again, those bear rallies are being great opportunities to jump on those. So velocity so far, I know these numbers will change a little bit because the sell-off that we're seeing on a Friday here. But overall, Aussie Kiwi is jumping a little bit. But again, those moments are great shorting opportunities, especially with the Aussie. The RBA did not raise rates last time. So where we still have some other central banks are raising rates. I think this is a good opportunity to use that and see if there's a bigger break coming in the Aussie. So I like the Aussie on the downside going to next week.
And Ankit, I think you're exactly right. And I love this velocity score chart because we've been talking about being short Aussie Kiwi, but anytime it rallies, you want to really be looking for a good shorting opportunity. Look where they are right now. I mean, look where they are on trend. They're trending hard to the downside, but in the short term, they're bouncing up. So I think this is a really good opportunity. I know that I was in Euro Aussie last week. I'm looking to get into Euro Aussie again this week. I think that is the trade. So I know that's the trade I'm really hunting this week is Euro Aussie, but it could be Euro Kiwi because we've seen Euro or Aussie and Kiwi, they seem to like to flip places of who is going to be the weakest at the moment. Let's take a look at them. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Let me bring up my favorite, Euro Aussie. And here we have a daily chart. So look at this daily chart. I mean, you can tell that we just spent really about a month and a half consolidating in here. We've now broken out and we're now pushing up against the upper resistance up here. If this breaks out, and it's really looking like it already has, the question is, where is the next level of resistance? And you can see that we are going back to, COVID era, going back to October 2020. I mean, actually, we're going to break through that. This is a really key point. There is a lot of upside on the chart because there's nothing outside of this 167.50 area when it breaks out. So the only question is timing. What's my timing? When should I get in? And look, this is a beautiful chart pattern right here. We had a run up to resistance. We pulled back. We've bounced, and we're about there right here. So I like this trade right here, right now. I'm not going to make it on a Friday. I'll take a look at it on Sunday or Monday, but this to me looks really, really good. And let's take a look at Euro Kiwi because it might be that the Kiwi is the better short. And take a look at this chart. I like this chart better. I frankly like this chart a lot better. I love high bases. High bases are stronger than bull pullbacks, and this thing is breaking out and running to the upside. So to me, Euro Kiwi is number one, Euro Aussie number two. Okay, what do you want to take a look at?
Hey Rob, I'm on the same page here. Let's take a look at Aussie Swiss franc and Kiwi Swiss franc. I just wanted to show that, if you look at the daily and the weekly, I mean, this thing is, we talk about currency that's trending. These are the ones that are trending, and they just keep falling. I mean, we are getting towards the 2020 lows, but again, this is where the negative momentum is. And if we take a look at both the Aussie Swiss franc and every bear rally, you can see has been a good shorting opportunity. So right now we're in this bear rally mode. And if it breaks below that parabolic SAR at about 57.20, we can use that, use the 57.60 high, that 40 pip range, and see if it breaks lower. The RSI also turning lower as well. So this is getting ready for a short. So I do like this for next week, and Kiwi Swiss franc, we can also pull that up, and it's a very similar pattern. And on the daily chart, this is also just making new lows. So these are the two areas that I do like here. And just before we get into this, is the Euro Aussie better, or is the Aussie Swiss franc better? Let's take a look at Euro Swiss franc. And this is where I talk about that divergence. For the last few weeks, we had this negative divergence. So on the daily chart, you can see that it is continuing to move lower. But in the shorter term, it does find support, and it does find these areas to rally. So if you are unsure which one is going to be the better one, either we can diversify into a half a position in Aussie Swiss franc and a half in Euro Aussie, or pay attention to Euro Swiss franc and what that is doing, and pick the one that's actually performing better. In the shorter term, it's actually in a sideways play, but that is just one of the strategies I like to use, but I'm unsure which one is actually moving. So give yourself a little bit of exposure on both. I think that's really the right play going into next week. And looking at dollar crosses, Aussie dollar, Rob, if you want to pull that up, I just wanted to show that it is against a very important support on a daily chart. I want to just highlight where we are. I mean, that's a very important level of support. And the more you zoom out, and Rob, if you want to zoom out even to a weekly chart, it's so interesting where this thing continues to find that support, and it just keeps sort of rallying it from there. So I think that's a major level of support that we are up against. The parabolic SAR is right there. We did rally back in late June or early June. We did rally from that level, and here we are back down to that level again. So I think if the dollar can catch some strength, I think Aussie dollar also is a good play as well. It's just a matter of picking the right currency and to see what's moving. But overall, I'm very clear that I like to be short the Aussie and the Kiwi. Now, it's a matter of being in the Euro trade, the Swiss franc trade, or in the Aussie trade, or in the dollar trade. I think I'm clear on one currency, on the direction. I just have to pick the other ones to make sure I'm in the right place at the right time. But yeah, I do like these levels, and especially on the break of those levels, I would love to be jumping on that as well. Kiwi dollar, Rob, if you want to pull that up, same thing. Entire week, it has really went sideways or touched that 60, 50 area as a support. If we look at that consolidation, I want to highlight that where we were back in October to where it has been for the last few months. It does have room to give up. There's that premium there. So I do like this on the break of that 60 area if we can get below that. So those are the crucial points that I'm looking at, those late May, early June lows. If we can break below those areas, I think we can have another push down to the downside. So that's what I'm looking at. And of course, next week, based on where we see the relative strength and weakness, we'll pick those currencies accordingly.
And I hope everyone has noticed just how focused we are. The reason we go through our relative strength and weakness is because you can't look at all the currency crosses all the time. And frankly, it's a dumb thing to do because some of them aren't going to be any good. So we do our relative strength and weakness so we can say every week, every day we do this exercise, these currencies are where we're going to focus our efforts. And so notice we didn't talk about CAD. We didn't talk about pound. We didn't talk about yen. Those aren't even in the discussion in my trades this week. I won't even look at them. I won't even try to cross them up because I'm hyper-focused on what's actually moving and trending now. So you did a great analysis of that. And you can see we're talking about Euro and Swiss franc. We're talking about Aussie and Kiwi. And then we're talking about the dollar. That's it. That's the trade right now this week. Of course, that's why we have end of day sessions to where we update that if it changes. But that's where you should be focused right now. So this week, watch for those inflation numbers. If you're trading the Kiwi, watch out on Tuesday night. That is going to be a decent report to move Kiwi. But other than that, I think this is going to be another great trading week. Typically, Augusts aren't great trading months. This month has turned out, at least the first week, to be really good. So let's hope that it keeps going. That is the Currency Room. Thanks for joining us. Goodbye, everyone.